This
Good.
meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Taylor. And we have a bonus episode. This is number 4.
By the way, for you guys, we just hung up and I was like, we didn't even talk about FedEx. He's like, let's do it.
Yeah, I'm done. I got 15 minutes. Let's roll. So let's talk about FedEx. I'll kind of tease what I saw and then we'll break it down. So I've been watching the market pretty well for 30 years. I do not remember a pre-announcement that ugly. That may have been the worst pre-announcement disaster I have ever seen. What do you think?
Yeah. And so I haven't been watching the markets as long, but what I read was this was the worst pre-announcement FedEx has made, or the worst announcement FedEx has made since 1980. So you're getting 42 years there. But this is just ominous when you see this, because this is, how do we get everything these days? It gets shipped. And whether it's UPS reporting, whether it's Amazon and however they report their shipping numbers, or FedEx, like this is one of the big 3, right? And USPS, but they came out and said that we're cutting revenues by $500 million, which was the biggest cut they had seen since 1980. And they said, and I'll quote here because I wrote it down, it said, global volumes decline as macroeconomic trends significantly worsened later in the quarter, both internationally and in the United States. Yeah. That is someone who carries all of our goods to our houses that we all buy everywhere online these days, saying that shipments are coming in meaningfully. We need to cut our forecast, and we're not going to project anything going forward. We're going to take guidance off the table. We're not going to tell you what our thoughts are because we've been so far off and things are slowing so quickly. And it's like,
yeah, $500 million. You got to remember that's in a 90-day window. That's like
right.
$5 million a day.
Good contextual point. Good contextual point.
That's hard to do. So, this came out on Thursday. Obviously, he was interviewed on Jim Cramer, back to that discussion with him, Jim buying treasuries. He actually said he thinks he sees a worldwide recession. A couple of the things I remember him saying, China's a disaster. Europe's a disaster. U.S., okay. But the other thing I remember him saying is shipments got worse week after week after week. So this feels like a trend to me.
Yeah. This quote that I read there specifically referenced later in the quarter, which is directly to your point that you see things coming down week after week after week. We put out something on Instagram, like, I don't know, last week or the week before, whatever it was. And it was GDP expectations globally. It wasn't globally. It was country by country for the G7 or something like that. And it went like this, and then it just started to tail, and it was everyone's expectation coming down for every major country around the world. And it was like, we said something like tongue in cheek, like, I think we can see a trend here, but we aren't sure.
Yeah, we're not sure.
It was like,
is this a trend?
Yeah. If you had to do a best fit line, it was, diagonally downwards, not in the direction that you were looking for it to be, obviously. But it was funny.
Go ahead.
You did hear a little pushback from the market saying, hey, this is actually, when you dig into it, this is FedEx specific.
Yeah.
And I looked at it and I was like,
there is that micro call.
That's the bulls ringing on the bull's bell right there. At some point, all of the economic data that continues to weaken, you can't continue to make excuses that, this is a company specific thing. No, it's not. It's not. A little bit might be.
Yeah. Transports, which is obviously where FedEx plays. Transports is a pretty good leading indicator of what's going on, right?
So it absolutely is. And they said that they have a little bit, like, the part of the commentary behind, this is FedEx specific, is the fact that they have more Asian exposure than some of their competitors do. And so therefore they're disproportionately affected by that. But as we all know, this is a pretty darn global economy at this point. Yeah. And if Asia starts to sneeze, it used to be the US sneezes, everyone catches a cold. Anyone sneezes, the colds start to get, spread around a little bit.
Well,
that's not a COVID thing.
No. If you, when you look at the world economy, right, there are kind of 3 big blocks: Asia, mainly China; Europe, mainly Germany; then North America, mainly the US.
Yep.
I don't think there's any question. I haven't seen anybody who is not calling it at least a recession in Europe. Some are now calling it a depression. So that's 1. 2, the numbers or the behavior in China, not good. Now, will their numbers ever say a recession? Probably not. They're cooked. But when you have consumers celebrating being frugal, refusing to pay mortgages, bank runs, none of that makes me feel particularly good. And you still have COVID lockdowns of 20 to 25 million people. I can't believe they're still doing that. How can you have any consumer confidence? In the US, the consumer is about 68%. And in China, it's about 51%. You have scared the bejesus out of the consumers. They are not going to spend. They are going to save. I don't know how China's not in a recession already or will be in one shortly.
I'm with you. The three major economies around the world right now are all in, not dire situation.
No, but they're slowing down.
Europe is, though. Like, it'll be interesting to see how the political stuff plays out in the Far East and how that affects Europe. But right now, Europe's in a really, really tough situation because inflation and UK got a little bit of reprieve on their latest inflationary print. But at the end of the day, their inflation's higher than ours.
It was 9.9 and they celebrated.
Yeah, exactly right. Some of the South America, Argentina's at like something like 75% inflation.
No, 100% inflation. They raised their rate to 75%. That's nuts.
I mean, come on. Yeah, it's just nuts. And so, like, and I know that Latin America and South America in general aren't a massive portion of the global economy, but nonetheless, if we don't even have something to point to and say, yeah, they're killing it there. Like someone's got to offset and be positive on the other side.
Yeah, in order to get growth, somebody's got to be growing to pull up all the the nut. But yeah, I think, and I think I said this. I think 2023 will be my third worldwide recession of my adult life. It's coming, I think.
Wouldn't shock me. They don't happen all that often. Usually there's someone that is that glowing light at the end of the day, but yeah, it's tough to make an argument against that. I totally agree.
Yeah. So, I think things get better in 2024, but yeah, I think we've got a long way to slog through. Anything else you want to talk about FedEx?
No.
How about NVIDIA? How about NVIDIA? Since we got you here, NVIDIA's tomorrow, right?
NVIDIA's got a big investor conference going on too. That'll be interesting. NVIDIA has taken it on the absolute chin, to say the absolute least. And I think they have a big investor conference tomorrow or the next day as well. So that'll be interesting to see what comes out of that as well.
Yeah. And then lastly, in a world of higher and higher rates, a steeper yield curve, a stronger dollar, we've got to see the FX charge coming through more and more multinationals, right? Just math.
We've discussed that as well.
Math.
14.5% increase in the US dollar versus the global basket right now. And again, just to reiterate what I've said 3 times probably, is for every percent increase of the dollar, it generally leads to a 0.5 point decrease on S&P 500 earnings. So that's 7% getting shaved off of S&P earnings by the increase in the dollar.
I think this is the quarter where we see meaningful earnings cuts. I think we saw a little bit last quarter, right? We've seen a cycle peak. I think this is the one. I think obviously it kicked off with FedEx. I think it gets worse from here.
Yeah. You look at almost so we just did a pretty exhaustive study on this about the effect of the US dollar on different asset classes. And they all have an inverse relationship outside of one. So as the dollar goes up, everything else comes down outside of one single asset class.
No idea.
Long dated treasuries.
Oh, of course.
Long dated treasuries, right? The ultimate risk off trade. So that's again, but we haven't seen it this time. So, I mean, we'll see.
But I guess I'll just ask you, if you don't want to talk about it, you don't have to, but what about the yellow rock? I mean, I thought it was the ultimate hedge against inflation. Why is the yellow rock trading at a 52-year low?
Oh,
or 52-week low. Oh, gold.
What the heck is he talking about?
Gold. Sorry.
Oh man. I don't have a perfect explanation of that. And you know what? Some of the miners have sold off really bad. Like Barron's had a really good article this weekend as to
the yellow rock.
Why, like Newmont. Why? Yeah. Well, yeah, fair. Yeah. They had a good, a good article, long article, whatever it was, on Newmont and it being cheap right now. I don't have a great explanation of that. Historically, you've seen that as a good inflationary hedge. Crypto.
Where is it? Yeah, crypto. Yeah. Somebody called it a tumo. Who called it a tumor, right? Somebody over the weekend, a baby boomer, a boomer, as they say, was like, when you get zero rates for long enough, you get tumors like crypto.
Yeah.
Like, ooh,
well, that's such a fair assessment. I totally agree. People start to do totally illogical things. But my comment on that was people were heralding this as an inflationary hedge.
Yeah, they were.
In a low and decreasing inflationary environment. And then the inflationary environment starts to pick up. And granted, gold hasn't done a great job either. So let's not say that's a reprieve, but
no,
nor is crypto.
Yeah. Cash has been okay place to be. Yeah.
I said something the other day in one of our videos or something like that. And it was talking about, hey, there's no place to hide. And someone responded back, I think I just read an article that bank accounts are still doing okay.
Yeah, bank accounts like nailed
really
it.
well done. Really well done.
Well done. Well done. Cash is okay. Cash is okay. Taylor, man, this is a lot of fun. Thank you for this bonus episode. I appreciate you.
Yeah. Good chat with you as always. Appreciate you.
And where can people find you?
Yeah, find us at Life Goal Investments on Instagram. We'll put out 2 things a day on there, just macroeconomics, trying to educate and in layman's terms too.
Yeah, you are truly helping people. The stuff you're putting out, it's really hard to make these complex things seem simple, and you're doing a wonderful job. So whoever's leading that effort deserves a raise.
Yeah, we'll do quantitative tightening today, and what that's done to the market. That'll hit today. So
nice. I look forward to it. Thanks, Taylor.
Thanks so much.